Everyday consumers could be impacted by large data centers. Now, outside of the amount of space these data centers are occupying, the impact on electricity prices should remain a concern for the everyday consumer. Electricity prices climbed 6.9% in 2025, which was more than double the headline inflation rate of 2.9%. Analysts at Goldman Sachs point out that they believe prices will continue to rise through the end of the decade, and households will see an additional 6% increase through 2027. I worry this estimate may even be conservative, considering data centers are estimated to make up 40% of electricity demand growth through the end of the decade. And I don't believe we have the infrastructure in place to handle this kind of expansion. While we know the demand side of the equation is increasing, the supply part is problematic. Electricity supply remains constrained due to regulatory hurdles and a shortage in labor and materials that make it hard to build new power plants. This likely means utilities will need to spend more on infrastructure, which will lead to more costs being pushed on to consumers. There have been discussions about these hyperscalers paying a different rate than consumers, which may need to be a necessary outcome. If this were to occur, it does make me question how profitable this AI build-out will be for companies like Microsoft, Amazon, and Meta. Not only will they be faced with higher utility costs, but they have been raising debt, which will add to the interest expense, and we have discussed the impact of depreciation expense with these massive capital expenditure budgets. While many remain optimistic about the AI build-out, I do continue to have my reservations. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.